the information I'm about to give you is going to raise your heart rate up so much. You want to get that link down below where you can sign up with Ladder for life insurance in just 5 minutes. So let's talk about CPI data. What does that mean? Consumer Price Index. What does it do? It actually gives you the indicator of what you're actually paying for in prices against consumer goods and services month over month, i.e. inflation. Matter of fact, you've probably seen a headline today that said inflation has increased by 8.5% year over year. And over the last month, it actually increased by 1.2%. Now, what is some of the things that's actually making prices go higher and making you spend more money to actually get the same things that you're accustomed to living in your life? They're actually going to be gasoline, shelter, and food. 3 of the things that you probably need to get through your daily activities each and every day. Right? So you live in your house. If you don't have a house, you're paying rent. If you actually go for work or you're traveling just to do the things that you love, or you're trying to take your kids to soccer practice, that is another thing that you have to do because you got to buy gasoline. And obviously, folks, you got to eat at the end of the day too. So why is this so important? 18.3% of all the changes that we're seeing in inflation month over month comes from you actually being at the pump. That's right, paying that in gasoline prices. So how are we actually seeing the economy actually work the way that it actually is right now? Well, gas prices are starting to trickle down, but don't forget in March, they actually was about $4.30 on average that you was actually paying at the pump. Now you're seeing that trickle back down to about $4.11 at the current time because the Biden administration has decided to release the oil reserves that we had in storage in the United States to alleviate the pain that you was feeling at the pump. If you're delaying what you have to pay later, you're going to feel the pain even harder coming later. Why is this so important that we talk about these 3 levers? Well, let's start with food first because we already covered gasoline and you already know how that feels because you feel that at the pump. But let's talk about food. Food is going up another percent. As a matter of fact, food has seen an increase in the last year of about an 8.8% rise. Now, looking into shelter, shelter is one of the biggest contributors outside of gasoline in the overall inflation talk that we're seeing. And that's because, folks, we're still hearing prices of home values are continuing to skyrocket, while the interest rate now is going up as well. As a matter of fact, the interest rate on a 30-year fixed rate mortgage at this point in time averages about 5.25%. Now, why do we talk about that? Because at the same time, we're not seeing no alleviating pressure on rents. With rents going up, with home prices going up, and loans actually getting more expensive, you're seeing that the market is not getting any cooler in the housing sector. With that not coming down, that's making price valuations increase across the board. Now, as we talk about this, we also got good news though. First time we've seen in a long period of time that used cars and trucks prices have decreased 3.8% month over month. Now, that still means that used car vehicles up in total 35% in the last year. So we still have a long ways to go. But this is where you want to start looking at companies like CarMax, Carvana, things of that nature. They may start seeing price valuations come down as we continue to see used cars and trucks come down. So let's see if that continues to trend into the next month of the CPI data reading that we get. Now, let's head on over. Let's talk a little bit more here because we got some other news that I want to get into. 6 major grocery store food group indexes increased in the month of March. To me, that means obviously companies like Kroger, Albertsons, Costco, Target, Walmart, those are all in the grocery aisle business, folks, and they are going to continue to make money, and analysts are going to increase their rates of what they think the revenue is going to come in based on this data that we're seeing as we finish up Q2. Now, let's talk about this from the other standpoint of the food that's actually being sold in those grocery aisles. Meats, poultry, fish, eggs. Folks, we've seen that increase by 1%, and that means that you want to be in the money with Tyson Foods. And I think that is a great play in this market because we're going to continue to see Tyson trend towards $100 a share at these levels that we're seeing with the price valuations continuing to increase on what you're paying in the grocery aisles in the freezer section. So why do we talk about this a little bit more? Because if you look at it overall in the last year or so, we've seen that all the meat, poultry, fish, and eggs has increased by 13%. And don't forget about beef. Beef is up currently at this point in time, 16% as well. Now, let's continue to talk about energy because energy is important, okay? This is where you want to be starting looking at valuations of companies that you're into when it comes to the energy sector. Because overall, the energy sector has increased by 32% in the last year alone. And we've already covered what's going on with gasoline by being up just 18.3% in the last month. But folks, the full reading for the last year is 48%, alongside natural gas rising another 21.5% alone on itself. Now, highlight, right? The rent index increased by 0.4% in the month of March, as did the owner's equivalent rent index. That means that basically people who own homes who are renting them out, their rents went up as well too. But when you look at lodging away from the homes, it's actually increased by another 3.3%. So you stay in the Airbnbs, you stay in the hotels, things of this nature. We will continue to see that rise after it rose another 2.2% in the month of February. Now, one of the things that I saw that I actually took liking to when I saw in this report is that airline fares has increased. So if you're into the travel sector and that's one of your babies that you like to invest into, you will see that airline fares actually rose by 10.7%, which means that companies are now starting to see travel pick up in the measurement that it needs. How do you actually know this? I like to use the TSA Checkpoint Numbers as my reference to see exactly where we're at. You can just Google this. You can come up with it on your own. You'll see in 2019, 2.4 million people were traveling prior to the pandemic through the TSA checkpoint as of yesterday, 2019. But if you look in yesterday's report, you'll see that actually 2.1 million people actually rose through the airports altogether, which means we're about 300,000 displacement between what we actually was at pre-pandemic prior to where we're at now, and now we're starting to close that gap, and that gap may actually see recovery sometime in 2023. With this may be the signal that we need to see where more money moves into the airline sector. And if that does, then that means it picks up in Uber and Lyft. Then that also means that it picks up in Airbnbs, Booking Holdings, then you Marriott and Hilton. These are all trickle-down effects that you got to be paying attention to as you're looking at this all together. Okay, so let's talk about this a little bit more. Let's talk about wages. When it comes down to wages, folks, people are still out there getting paid big bucks. We've seen earnings continue to go up in wage growth, 1.5%, which is great to see, but also at the same time, we're going to deal with other pains. So, are we heading towards a recession? That is the number one question that you probably tuned in for. Absolutely not. Not at this point in time, in my opinion. I think that we're seeing that the economy is still trying to level out and get to a point. But we may be getting to a point where a tripwire may increase. If we continue to see valuations like this in gasoline prices, we see home prices don't come down, if we see things of this nature continue to rise up, we can start seeing that the bear market can increase in the S&P, because the S&P bear market is at 20%. If it goes down 20% from its peak to trough, we can actually see an opportunity here where the market cannot get back to the level that it needs and the Fed can't bail us out of it. How do you continue to play this game? You got to watch the housing sector, in my opinion. As long as you see interest rate continue to rise, we're probably going to get to about a 7% 30-year fix, maybe even 8%. If you get to that level and you still see prices are not starting to taper off and come down in home appraisals or valuations, we are going to be in big trouble. And if we're in big trouble, folks, stand clear, because this recession is going to last a quite a ways. I still think there's a lot more things that need to happen before we get there, but it's probably closing in and it could send people into a panic. So start saving those dollars, start saving those cents, because you don't know when it's going to rise and when it will show its face. Comment down below. Do you think that a recession is on the way? If you do, let me know why. If I did raise your blood pressure up, don't forget to use that link down below where you can sign up with Ladder in 5 minutes for life insurance. And also, if you found value in this content, don't forget to hit that like button. Don't forget to subscribe to the channel. And don't forget to bang the notification bell so you can be notified each and every time I drop way more high content like this. Been your boy Craig. Y'all stay safe. Peace.